Ladies and gentlemen, welcome to a brand new episode of the Paytech Show, the premier program for top-level finance execs, where we delve into the world of payments, explore how reconciliation and automation are empowering fintechs and banks of all sizes. Today we have an exciting lineup of guests who will provide valuable insights into the ever-evolving landscape of not just payments, but cross-border payments, and also instant ones too. I'm your host, Doug McKenzie, and we have a thrilling episode in store for you today. Our journey begins right here in our very own studios, where we hosted Nicholas Botha from AutoRek, a leading expert in the field of payment reconciliation and automation. Nicholas will shed light on how AutoRek is spearheading the charge in reconciling and automating payment processes, enabling fintechs of all sizes to navigate the significant changes going on in the industry. Next, we ventured just a hop, skip and a jump away from the FF offices to the vibrant district of Shoreditch to visit the office of Wise. There we had the privilege of speaking with Steve Naude, a key figure at Wise, and they revealed how Wise is continuing to lead the way when it comes to cross-border payments, leveraging the power of reconciliation and automation. Now, our exploration of fintech and payments in the East End wouldn't be complete without a visit to one of the industry's giants. So we made our way just a bit further into the city, to Cannon Street, to sit down with Marquard, a distinguished representative from Mastercard. Alan's going to share his perspective on the transformative potential of reconciliation and automation in the world of payments, shedding light on how Mastercard is driving this around the world for millions, if not billions of people. Get ready for a captivating conversation filled with invaluable insights for our esteemed guests. We're going to explore the challenges, the opportunities, but also the cutting-edge solutions that are revolutionizing and enabling us to get access to these opportunities. So stay tuned, because this is going to be an absolutely brilliant episode of the Paytech Show. Now, you are the person to come to with this next question, and that is to look at the changes that have happened within cross-border payments, and ultimately, if we could just for a moment look at the customers at the end of the journey that are, what are their demands, what are they seeing from this change?
It's a good question. I think customer expectations have really shifted in recent years, not just in payments, but in many things, right? If you order food to your home, you want it to be there in 5-10 minutes. You can get groceries in 10 minutes in many parts of London. When you then send money internationally, and it takes 3-4 days, there's a really disconnect from this kind of now world that we live in. So speed is a huge part of customer expectations these days. With Wise, over 50% of our payments are instant, which is less than 20 seconds from one account to settling with the recipient. Yeah. And that's where customer expectations are now on speed, is making sure money arrives not just when we say it will, but actually very fast. That's been a huge shift, as well as a shift on customers understanding how much this costs them. The transparency aspect of international payments. So not just where the money is, but how much it's going to cost to get from one place to another. We see lots more interest in people really digging into how exchange rates work. What are the fees involved? What am I actually going to pay? And the expectation to understand that really clearly up front is definitely something we hear a lot from customers now.
I can imagine. I mean, when you think of a bank, you always think you're going to get the best customer service because they've been sending money for hundreds of years. But then actually, when you think of it, as you said, there are 200 different products they're trying to do. And so, funnily enough, sending money isn't what they're best at. Now, if we look at the back end then of a bank that is having to try and send these payments cross-border through various different regulations at the speed that customers are now demanding, what are the challenges that they face?
Yeah, there's a few challenges with this. So partly, in order to move money instantly, you need this global network of your own licenses, your own partners, your own integrations into instant payment schemes. And that takes time and effort to build, right? To go globally and set up entities and get licenses and form these partnerships in all these markets is a big challenge, right? It takes a lot of money, a lot of time, and it's a big commitment to invest in. Once you do that, you always have to comply with the local regulations as well, which differ by country. In some countries, you may need to send different information with the payment to get it to settle immediately. In some countries, there may be regulatory reporting. Places like Brazil, for example, every transaction over a certain threshold has to be reported to the regulator, which takes another integration into their reporting system to do. So all of these challenges, both technical, regulatory, and operational, understanding how all the money works, how all the local schemes work, are pretty significant.
When it comes to the compliance side and the safeguarding elements for payments companies, there are three main factors that we help our clients with. I like to call them the 3 R's of AutoRek safeguarding. The first one is the regulations themselves. The second one is the reconciliation requirements. And the third one is the relevant funds identification. So when it comes to the regulations, we are able to assist clients in being very flexible in terms of any changes with the regulations. If there's updates by the FCA or any other regulators that require them to make changes in the platform, it's not a very time-consuming, very expensive exercise. Again, it's driven at the front-end users making tweaks and changes and improvements to the configuration. So clients can really stay on top of what the regulations are asking them to do. The second piece is the reconciliations. There is a requirement by all organizations to perform daily internal and external reconciliations for safeguarding. AutoRek provides that in an automated, again, time-saving and very controlled manner. And the third element is relevant funds. And I know relevant funds are quite a difficult factor for a lot of clients in the payments industry, effectively and accurately identifying which funds are relevant funds and which funds are not relevant funds. And AutoRek has the functionality to be able to automate this process through rules configuration, through the front end, so it's not been done manually or eyeballed or done by the end user. This is all specifically rules-driven and done in a controlled environment. So those are the 3 elements that we look after. And I won't speak about the challenges. Let me actually refer to the recent FCA Dear CEO letter around safeguarding. They mentioned a few key factors which I'll read to you. So the three main pieces that the FCA have identified when it comes to safeguarding. The first one, it says that firms not having documented processes for consistently identifying which funds are relevant funds. I just pointed out to that point around what AutoRek does in that regard. Inadequate reconciliation procedures to ensure that the correct sums are protected on an ongoing basis. Just spoke about how we perform the internal and external reconciliations. And the third piece there, a lack of due diligence and acknowledgement of segregation from credit institutions providing safeguarding accounts. So what AutoRek does in this regard is that we have the ability to segregate this data and provide MI dashboards and reports in terms of per credit institution and per safeguarded account, what the position is if there's a surplus or deficit in the required and current funds. Very technical jargon there, but the point being here is that in the Dear CEO letter, everything that the regulators have identified that there are issues with when it comes to clients safeguarding their funds, AutoRek can cover that end to end.
What are the challenges that come from cross-border payments, especially in such a regulated industry as payments? How costly can the mistakes be from a manual process?
Yeah, that's a good question. I think maybe some people don't realize the complexity of cross-border payments, because people, the thing you always hear is, I can send an email in 1 second cross-border, why not money? And there's some truth in it. And when you look at domestic payments, we've really progressed, not in every country, but there are real-time payment systems in 60 plus countries now. We're used to just being able to do things instantly and easily. When it comes to cross-border, there's a whole, I'd like to call it spaghetti, but it's messier than that, behind the scenes. Cross-border payments used to be the domain of large value, big corporate payments, banking payments, and the like. And so the correspondent banking network was the solution to doing that, where banks had correspondent relationships with other banks in countries. And there's it's still going to be important for a long, long time for high value payments. But a lot of players don't want to do that for small value payments. There's just not enough in it. And so providers, either money transmitters, providers like us or others, are stepping in to take out some of the pain from payments. And I could honestly sit here all day and tell you the complexity, but if I hit some highlights of what we try and take away from senders of money cross-border, there's obviously the technology, right? But one of the biggest things is maintaining a network, maintaining reach. You know, people want to be able to pay to the more than 100 destinations that we pay to. That, in a correspondent relationship, means having banks in country, individual relationships with each one of them. A number of the big global players in correspondent banking did what they call de-risking some years ago, looking at jurisdictions that have higher money laundering risk, for example, where the flows can't justify everything that goes through checking and all the failed transactions, and have pulled out of them.
Wow, okay.
So there are only a few players that really have networks that reach anywhere in any currency for all practical purposes. I mean, we reach 90% of the world's population with our offering. So there's maintaining a network. There's the ability to do all the sort of onboarding and KYC and transaction monitoring and everything that goes with that. The ability to do fraud prevention and analytics. There's, as you can imagine, there's a lot of technology and AI that gets layered in to doing that. There's the credit management of when payments get made in and get made out.
Are they going to be liquid?
Yeah, there's liquidity management. There's managing the FX.
Yeah.
That's a critical part of it as well. There's the fails and customer service. There's just, and then there's the whole licensing regime and keeping up to date with that everywhere that the money is sent. So there's a huge machine that has to operate to do that. What we try and do is we try and automate as much of that as we can so that we effectively take the entire problem away.
How many different reconciliation platforms or automation systems do organizations like the big traditional banks, the newer banks and card providers, how many do they typically use, and how costly can the mistakes be from doing this in a manual way?
Yeah, that's a good question. I suppose it's quite difficult to identify how many each individual organization is supposed to use. Some organizations have one central repository which they're using one system for to look after all their automation and reconciliation. Alternatively, you could have some organizations which are using very disparate systems per different business unit or per different team to manage these processes. I think a couple of the key factors to consider on the strategic opportunity at hand when it does come to these systems is, if you are going to go for multiple systems in different teams or different geographies, for example, that they're interoperable between each other. You need to have these systems being able to speak to each other. If they're too disparate, then you end up creating more manual work between these different systems as opposed to them communicating with each other. Alternatively, if you want to go for the option where you have a central repository with one system looking after sort of all your reconciliations across all your different business units, then there's a lot of different options there. I suppose there's always a flag that if there is an issue with that system, that's going to have an effect across all your different business units, but that's why making sure that you have a flexible solution to meet these ongoing changes and requirements across all your different business units is imperative, yeah.
I think the key thing that you mentioned there is that the flexibility of the solution, because on one hand you don't want to end up piling in system after system and then everything rapidly becomes siloed and you end up with a huge amount of legacy tech, which I'm not saying it happens in banking, but it happens in banking. How do you guys at AutoRek kind of work within that kind of flexible delivery system?
Yeah, so AutoRek is an extremely flexible solution. I think that's one of the USPs that we have. Everything is configured through the UI. We are data agnostic. This allows for organizations to really tailor-make the solution to what their requirements are, even specific to different teams or business units. Going back to our previous point. So that configurability through the front end, we train our users or the client's users to be able to use the solution and configure the solution. So as and when they need to make changes, there's no reliance or large IT projects. It's not very costly. or there's not a lot of resource required to make those small adjustments and changes and improvements in the solution. You can simply train your front-end users to be able to make those changes, speed to deployment, push that through testing environments as an example, all the way through into production, all through the front end of the solution.
Payment needs, rich data in payments can help feed into accounting systems for reconciliation. So there are a number of open banking use cases, but even just in an ordinary payment flow, richness of data helps in many ways. First of all, the better the data, the less likely the fail. Fail rates in some corridors because of lacking data are huge, and the cost of failed payments is astronomical. There's about $120 billion a year lost on failed payments.
Really?
When you look at the cost of all the reconciliation, the manual process and the teams that have to be kept in place by payment providers to deal with the relative cost of sending the 1,000 payments that work, and then the cost of the one that doesn't is a real tax on the business. So there's that. It definitely helps with fraud detection. The more data that we can extract on type of spend and the like, the more we can help recognize when things are going wrong. So it's critically important for that as well. And then aside from fails, it just helps with STP, straight through processing. The richer the message, the more likely it can be automated. So yeah, keeping a balance between privacy and having only what you need and all of that. The flip side of that is always going to be we can provide more services, more safety, more speed with rich data. So it's a balance yet again.
Yeah. How might a bank or a payments company, how might its back end be holding it back from growth? Because everyone focuses very much on the front end, they think that's what drives customer growth, but there's still that back end element. And how can your platform at AutoRek, how can that help address these back end challenges to mitigate both financial and operational risk?
It's a great question, and I suppose this is every organization's, thoughts. How do we improve these processes and eradicate these issues in an effective way? I suppose, in my opinion, there's a couple factors to consider here. There is manual intervention, so a lot of FTE count, for example. You can imagine that in times gone by, as an organization is scaling up and really trying to achieve that customer acquisition, they would throw FTE counts in the middle and back office to perform sort of these very mundane tasks. In today's world, however, these are very expensive resource. Most of the time, these organizations want to hire the best, the most qualified individuals, but then they are putting them in roles which is not actually using their abilities. So, effectively using your FTE resource is a point to consider. I've mentioned the interoperability between different systems. Having disparate systems that don't communicate with each other creates a lot more manual work, creates a lot more workflows, it creates a lot more work to be done instead of making sure that these are all communicating effectively. One that is a very important factor, and we've seen a huge migration over to this, is the the ability of cloud, creating scalable infrastructure for these scaling up businesses and these really large enterprise businesses across different geographies. Again, making sure that the cloud provider or the infrastructure that you're using is flexible to meet any changes in those requirements. Compliance, compliance is obviously always one that is at the front of everyone's mind. Regulatory compliance, it's something that you can't get around. You have to make sure that all your resources are driving towards being compliant. the end of the day, no customer wants to be, trusting their funds with an organization, a payments organization that has been flirting with the regulators' requirements. So absolutely making sure that you are compliant with the regulators' requirements is a key challenge. And there are a number of new technologies out there, AutoRek being one of those, the automation piece. But there are tons out there, from KYC to reporting to reconciliation. There's tons of new technologies. We speak about AI and machine learning very regularly, and it's about embracing those new technologies, using them to your advantage, but also making sure that it's all done in a controlled environment. And considering all of those challenges, overcoming all of those challenges is ultimately going to drive revenue growth at the end of the day.
When you tie all of these elements together, what is the benefit for the employees of this company? And is there kind of like a talent acquisition element here in play as well?
I mentioned how organizations always want to hire the most qualified, the best employees. But if there are very manual, mundane tasks that need to be done, somebody needs to do those. By using a platform like AutoRek, what you're doing is you're taking the need to do those tasks away. You're using your resource effectively. These are very intelligent, highly qualified individuals that you've hired into your business. Using that education and their qualification as effectively as possible through analysis of data rather than manual spreadsheets, as an example. I mean, if you ask anybody that's had to perform any type of task on a spreadsheet, it often is the bane of their existence. And moving to an automated world really just allows them to focus their attention on more value-adding tasks. What does focusing on more value-adding tasks do for the employee? It creates job satisfaction. It gets you up in the morning. It allows you to know that you're adding value to senior management and even further up into C-suite, that you're actually in some way or another adding to the growth of the organization. So absolutely, when it comes to acquisition of talent, there's a bit of a shift in focus, especially if you have the right systems in place. You don't have to hire people that can spin up a spreadsheet very quickly and maintain that. Again, that will cause a reliance on that particular FTE to stick around, but more focused on experience in using these platforms effectively in terms of analysis and of data.
How is the international standard ISO 20022 going to change the industry, and WISE as well?
The really exciting thing about ISO 20022 is the richness of data that can be transported with a payment message. Often this is where lots of the manual interventions come in today. A large payment is made perhaps, and you can add today, this is for an invoice payment, paying bill.
Oh wow.
That's great, but maybe one of the banks in the chain or the receiving bank says, there's something a bit suspicious about this, like I want to see that invoice, right? With ISO 20022 and some of these new standards, more rich information can be passed with the payment. For example, you could send the invoice along as well. So that bank doesn't need to go back up the chain, back to the customer, can you send this document? It's there already, right? This richness of data, for a better understanding of why customers are moving money, but also to help us all in the fight against financial crime. Really, really helps everyone in that chain or process understand more about what this payment is for and more about the purpose of it to better assess whether or not this is something that should go straight through or something we need to take more of a look at.
Let's talk about scalability. We've seen a big increase in the sheer volume of payments and also the amount of cross-border and instant payments in terms of the sheer numbers out there. These all have to, of course, comply with ISO. How has that made scaling increasingly difficult?
So ISO 20022 messaging has a lot of benefits. It's there to actually promote scalable growth for organizations in times to come. There are a couple difficulties when it comes to migrating over into this world of ISO messaging, and that's really where the pain point is coming for the clients. It's been dealing with a large banking institution undergoing their ISO migration, and it's a very time-consuming, resource-dependent, expensive exercise to get there. And one of the key factors for this actually happening is because they use many disparate systems within their middle and back office, and not all of them are able to ingest the messages coming through from ISO, not able to handle the reams of data and MI that these messages are meant to provide the clients. So there's an entire rework of many different systems, disparate systems within the middle and back office of these organizations. So moving forward, to effectively use these messages, it's very important that you are embarking on a journey with a partner or platform that's able to handle the messaging, that's able to handle the sheer growth in volumes, but also that's flexible enough to be interoperable between your existing platforms and the new messaging coming from ISO as well.
Thank you to AutoRek's Nicholas Botha, Wise's Steve Naude, and Mastercard's Alan Marquard for all your insights. Stay tuned for an absolute brilliant season, and also a big thank you to you, our viewers. You can catch the rest of the series and so much more over at ffnews.com, of course YouTube, but especially LinkedIn, where you'll see me, Doug McKenzie, in the comments.